Hey, Bulls and Bears, what is happening? Back with another dose of economic reality. My name is JJ. You're watching Bull, Boom, Bear, Bust. It is Wednesday, late night video again here. You might be watching this on Thursday, August 10th. But as I'm putting this out, it's August 9th. Banks are bracing for impact here. We've got a huge spike in loan losses here and what we call charge-offs for a lot of credit card holders. These banks are really starting to feel the pinch, and this is only going to restrict lending further. And what happens when lending gets further restricted? Well, the economy downward spiral accelerates, because this whole economy is based on people borrowing money and buying things that they can't afford. So this is going to really accelerate the collapse, in my opinion. Let's start right here out of this article. And this comes to us from the Financial Times. Loan losses at U.S. banks hit $19 billion as borrowers feel the rate rise pain. What did we tell you back as soon as rates started going up and we knew they were going to be held at higher levels for longer? We said it's only a matter of time before this debt house of cards starts crumbling down. We're going to start seeing defaults, more charge-offs, with these people carrying these enormous debt levels on their credit cards, not able to withstand these higher payments now and all this accumulated interest on their credit cards. So this news that we're looking at today may be shocking to some, but if you've been on this channel, if you've been paying attention even a little bit, you know, this should be no surprise to you at all. Credit card and commercial real estate customers drive charge-offs to highest level in more than 3 years. So we're going back to 2020 here, and pretty soon you're going to see it's going to be worse than the financial crisis. We're on our way up as far as defaults, late payments. The line is going up there if you're looking at a chart on it here. Let's get more into this article here, though. Right here, U.S. banks suffered $19 billion in losses from soured loans in the second quarter. We're just getting these numbers out here. The highest level in more than 3 years, as lenders contend with rising defaults among credit card and commercial rate borrowers. Losses on loans marked as unrecoverable during the last quarter, an increase of 17% on the first 3 months. But listen to this, 75% higher than 1 year ago. Folks, a spike of 75% in these charge-offs and these losses. That is a big jump. Basically, 100% increase would have been double. So we've almost doubled our last year rates of defaults and charge-offs. And does anyone think that this is going to stop? Are interest rates dropping? Well, no sign of that, because the fight against inflation. Is inflation dropping? Is the cost of living coming down? No. So that means higher rates for longer. And that means news like this is only going to continue and likely get much worse. And this article goes on to make a few very good points here. Consumers are plowing through their savings they amassed. We know that. We've looked at the savings rate. Plowing through the savings they amassed during the pandemic, while landlords are struggling to rent out space in office buildings due to more people working from home. Well, I would like to add to that, it's not just people working from home. It's also so many companies laying people off, and therefore another big factor in the vacant commercial real estate situation. And a picture can tell 1,000 words, right? So let's bring up a chart here. Look at the spike to the right here just recently, folks. That is a massive spike. Now remember, we were in a similar situation going into 2019 before the great health crisis. We saw defaults, charge-offs increasing. Remember, they raised interest rates for a very brief period of time before they were pressured to lower rates back down by a certain administration that will remain nameless, because there's so many people out there that are sensitive about that type of thing. Let's talk about protecting your wealth. The U.S. dollar has lost 85% of its purchasing power since the 1970s, when the dollar was decoupled from gold, and the government seems bent on continuing the tradition. From now until the next elections, the government can print as much money as they want. The last time they did that, inflation went up 9%. This means one thing: the security of your future and your family's future is all in your hands. Make sure you freeze the value of the wealth that you're holding. Invest in gold with Noble Gold Investments. Gold is the one asset that has proven to withstand recession, inflation, and just about all economic threats. Noble Gold Investments is here to help you if you want to invest in gold. You will also get a 24 karat 1/4 ounce gold standard coin for free. Go to bullboomgold.com now. That's bullboomgold.com, or simply call 877-646-5347. Noble Gold is the only gold company I trust. Link down in the description of this video. And here are the 10 big banks and their loan losses. Now, when you think of Capital One, most people think of credit cards, like what's in your wallet, right? The commercial. Look at Capital One leading the charge here, close to $3 billion in charge-offs, folks. This is nasty, and it's only going to get worse. We see JP and Citi also up about $1.7 billion apiece. B of A, Wells Fargo following their, Citibank, Truist, PNC, and finally TD Bank rounding out the top 10 here. Not sure what happened there. I don't know why they are not showing the Morgan Stanley numbers here. More than half of recent losses came from credit card lending. U.S. consumers have $1 trillion in debt. Of course, we all know that. We've been talking about that here. All-time high, surpassing financial crisis. The financial crisis, we were less than $500 billion. So we're more than double now of what we were during the financial crisis. Yet people think we're going to have a soft landing, and we've escaped, the economic downturn, and we've escaped all these things. Well, not so fast. It's just taking a while to play out. Remember, people had tons of money saved up ever since 2020 with the shutdowns and with all these stimulus and the rescue programs. It takes a while to bleed through all that money, but when you look at it, it really hasn't been that long, and a lot of money has been spent in only just a few years because of outrageous cost of living that most people are getting crushed under. And it should be no secret that one of the keys to keeping this economy looking like it's vibrant is continued issuance of debt, and including credit cards, so people can go out and buy things that they can't afford. And there's another article, bank rate here, $1 trillion credit card debt, average interest rate now over 20%, folks. This collapse is just going to accelerate as we go into the final months of 2023. If anyone thinks that this is not going to play out like I'm saying, please let me know down in the comments. And let me know what's going to reverse it. Let me know why I'm wrong, and maybe employers are going to give huge raises to everybody. Everybody's going to get double their salary. Employers are just going to be nice, and the CEOs, they're all going to take a pay cut, and things are just going to reverse. If that's your opinion, please let me know how that's going to play out down in the comments. Mortgage rates up again. Mortgage demand drops again after FHA loan interest hits a 21-year high. I shouldn't say interest, not that more people are trying to get loans, but the interest rate. So let me round that out to make it clear. Folks, these rates are way too high. Home prices are way too high. Of course, we know this. When does the correction happen? Well, it's happening. It's just happening a lot slower than most people expected. I was thinking probably one of the only channels, maybe the only channel, warning people this is going to be a slow motion collapse, right? The days of collapses in real estate are over. Some people call it 2008 a collapse or a crash, but the way things are being ran right now, it's really impossible to have a crash in the real estate market. And even the rate increases that we've seen, even though they've been raising them pretty consistently, have been small increases, right? 0.25% for most of these rate increases. And look at this, mortgage applications plunged 27% lower than the same week 1 year ago. Next, all right, folks, let's take a look at this. This is a nice chart here. Who put this out? Reventure, was that say? Reventure Consulting. And look at the cost to buy versus the cost to rent. Look at the yellow line here, and how it's so far disconnected now from the cost of rent. Now, if you look at the blue line, the cost of renting actually went up pretty significantly, especially over the past few years. Of course, we all know that here. But the cost to buy now is, way worse than it was during the financial crisis. And we see it's kind of topping out there. You see that little double top? Let me try to zoom in a little bit here. See that double top? Looks like we're reaching maximum insanity here in the housing market. And, you've got to see this come back down and correct back down towards the blue line. Now, the scary part is if rents keep going up, the correction back down towards the blue line, which are rents, may not be that big of a drop. But here's the thing. Rents have to start dropping as well, unless they put another freeze nationwide on rents or do some other insane, rescue package, quote unquote rescue package that always end up making things worse. So ask yourself, with all these programs to help people, did rent become more affordable? No, it went up higher. Did housing become more affordable with all the rescue programs? No, it went up higher. It got worse, right? So things are much worse now than during the time when they were trying to help everybody. So helping everybody first, it sounds great. Oh, they're going to send out money. They're going to, save people from losing their home, save people from getting evicted. Yeah, nobody wants to get evicted. Nobody wants to lose their home. And that short-term help ends up with more long-term pain. I mean, just look at the chart. Look at the unaffordability right now, folks. So all these things designed to help people. The more intervention and the more they come in with this hands-on approach to engineering the economy, the worse things get. It's pretty simple. If it was just about spending money and throwing money at the problem, then you would think a nation with almost 33 trillion in debt and over 100 trillion if you look at the unfunded liabilities, and well, actually it's closer to probably 250 trillion there. But if you just look at the total debt, so 33 trillion is just the national debt. We showed this chart on our last video. If you look at the total debt, including consumers, corporations, everything else, thrown in there, you're looking over $100 trillion in debt. So the $33 trillion, that's also kind of a misleading number. You have to look at the total debt with consumers loaded up on debt as well. So again, if you think that throwing money at the problem is the solution, then why are these things happening? Why is unaffordability, like that housing chart, why is unaffordability now worse than the housing bubble era? Because throwing money at the problem doesn't help. That's why you have to have sound money, and that's where we're headed. The question is, how much pain and damage are we going to sustain getting to that point where we finally see some decency and sanity, reach back into the financial markets, into the monetary system, right? So hard assets is where it's at. So watch your wallets, folks. Be careful out there investing. Invest wisely, spend your money wisely. And as always, keep stacking. Come back to this channel for more updates. If you like what we talk about here, please subscribe, and we'll make sure to keep on top of all this news for you. Reports coming out almost every day, but as often as possible. The more this channel grows, if it can grow, it's not been growing too well, but the bigger the channel gets, then the more videos I can put out, because then I can just focus on, this channel instead of having to do 3 or 4 or 5 different side hustles. So if you like this channel, please help out by subscribing and coming back for more updates, everybody. Thanks for watching. Big love. Keep stacking. Bye for now. Peace.